Welcome to this teachers webinar on strategy dynamics given on the 7th of January. The webinar was given for people wishing to teach strategy dynamics, whether starting with knowledge of strategy or system dynamics. As it turned out, quite a few of the people taking part in the webinar were practitioners and consultants, so some of the discussion concerned how to explain strategy dynamics to other people generally. You can find much more information about the course and how to teach it, and also information explaining how the course relates to standard strategy frameworks if you go to strategydynamics.com and navigate to the online course and the information pages under that. Okay, so I just explained that we've got quite a mix of people taking part today with lots of different backgrounds, and I also explained that we've got some long-term aims here, which is to get an order of magnitude increase in the uptake and the understanding of the principles behind strategy dynamics and how system dynamics applies to strategy and management. And a critical lever to that is to get much more teaching and much more learning activity happening, so that everyone out there in the big wide world who could and should be using dynamics for managing things better actually starts doing so. Now, I've been asked to address the issue of are we selling something here? Well, yes, we are selling something here, and it is that much better way to do strategy and management, and a much better way to explain system dynamics to people from all kinds of backgrounds. It's easy to forget that people don't always understand what we understand, so we really need a powerful way of explaining things. Now, I can't do that without using some kind of platform, something to show the models and so on. And the models that are actually in our course are built on a web application called Systea, and there's lots of information about that in the course and on the site. But if you happen to be familiar with Vensim or Insight Maker or whatever else it is you use, it's pretty easy to copy what I've done in whatever software you're happy with. And because this is oriented towards teachers, I should just point out that registered academics can get access to pretty much most of the stuff that we'll talk about for free. The course is free, the course materials are mostly free, the access to the modelling software is free, and much of it is free, well, a good fraction of it is free to use in class as well. But even if you're not a registered academic, we've tried to make the stuff as affordable to people as we possibly can. So that in a summary is what we're trying to get over and to promote. So just to start with what exactly it is this approach offers, and it's no different than what system dynamics offers in any other situation. We're trying to understand why the performance of some situation that we're worried about has got to where it is now over time. We're trying to understand where it might go into the future, and that will be, if things go badly or if we make bad decisions, what is a kind of bad outcome we might achieve. And then we want to understand how we might manage those external events, make better decisions, and end up with a much better future. And it's worth mentioning, in the work I've done over kind of 15 years on this, the difference between what we are currently likely to achieve and what we could potentially achieve is usually not just a little bit better, it is absolutely vastly better in many cases. And that's something of the power of what system dynamics can bring, and what we're trying to do is make that accessible to people who are interested in strategy questions. Now, the performance number that is mostly of interest in the world I come from is profit, or strictly speaking, it's free cash flow. If any of the audience here today is coming from a strategy background, that's what we're about. We want to show people how to improve that measure of performance over time, and it's very different than the kind of static ratio changes that dominates much of what we talk about in strategy. So we're not about moving return on invested capital from 10% to 15%. We're after growing profits and free cash flow over long periods of time. Now, even in business cases, there'll be many situations where you're pursuing non-financial aims like improving service quality or breaking into a new marketplace or whatever it may be. And of course, in non-commercial cases, there are lots and lots of non-financial aims as well. So you don't have to have a financial number on that chart. It could be any other kind of performance outcome you're interested in. The other point to make is that very often, strategy is supposed to be about the whole of an organisation. Well, yes, it is, but there are strategy issues for parts of an organisation or a function. We might be interested in strategy for our operations in South America, or we might be interested in strategy for our marketing function or our HR team, or we might be trying to deal with a specific issue like fighting off a competitor at a point in time. So that's the thing that system dynamics offers when applied to strategy, and that's what we've tried to do with this course. And it's worth just remembering, if you're trying to explain this to people for the first time, a surprising fraction of people do not immediately understand what these time charts mean. So it might seem strange and unusual, but there is a significant fraction who cannot read a time chart and interpret what it says. So just check that anyone you're talking to does actually understand that thing and understand what it means. There's a lot more about this on the kind of getting started for teachers stuff on the online course, but that's just a summary of what this approach offers. So when we talk with people who are CEOs or business managers or people responsible for strategy, the thing we can contribute is we can make a very important connection that they otherwise cannot make from a strategy which says who are we going to try to serve, what are we going to serve them with, and how are we going to do it. Someone somehow has got to get to a time-phased action plan. What are we going to do? How much are we going to do it? When are we going to do it? In all functions, at all times, with what outcomes, and how are we going to adapt that as events unfold? So if you're talking to people who've got a conventional education in strategy, or have got an MBA or whatever, a challenge you can put to them is, okay, so you've got a strategy. How do you get from that strategy to a time-phased action plan? I've been doing strategy for nearly 30 years, and I don't know any strategy tools that can do this. But by adding system dynamics to strategy, then you actually can answer that question. And only then, when you've got the time-phased action plan, can you figure out how much better performance you might get out of the thing over time. And it's that performance over time issue we're really focusing on. There's a reasonably extensive video on the online course page or on our website called Why Strategy Needs Dynamics, and that's really expanded upon in that video. So the question I get asked by people who've never come across this stuff before, system dynamics people, please forgive me if this is a bit basic, but if you've never come across this stuff before, it is quite daunting to try to teach it to people or to explain it to colleagues. And on this slide, what I'm showing is the whole of the strategy dynamics agenda. It starts with 4 classes which lay out the basic framework. It explains about this performance over time question. It explains how resources drive performance, and so on, until you get to a point where you've got a complete picture of what the thing is that you're trying to manage. After that, the course goes on and adds some powerful and important extensions. Now, nobody who's unfamiliar with this stuff is going to stand any chance of trying to do all of that straight away. So what we've tried to do is make it possible for people to take baby steps that are not too difficult for them to understand. You're going to struggle explaining to other people if you yourself don't understand. So take the baby steps and kind of get familiar with each step in the process as you go. And if you want to know what's behind all of those items, then when you go to the online course page in our on our website, you'll find that there's an overview tab in the course with an explanation for each of those topics. So I'm not going to go through all of those 10 headings right now. That's where you can find out more about it. So let me start with the first of those and just give you a flavour for some of the kinds of activities that you can do, either when you're teaching people in class or whether you're trying to explain things to colleagues. And the place to start is with that performance over time question. So let me just give you an example of how we do this in the class. The course is populated with quite a few examples, and 3 or 4 examples are carried all the way through the course with a number of developments as we go from class to class. And one of those examples is Europe's leading low-fare airline. I think it's probably the world's leading low-fare airline now, Ryanair. If you're from the US, it's just like Southwest. If you're from Asia, it's just like AirAsia. It's one of these low-fare airlines. And the chart on the right is a picture of that company's profit up to 2012. You can see there's a bit of a dip in 2009 when there was a recession, and this particular company cut its fares to maintain its passenger volume, and basically made life absolute hell for its competitors for a year or two. And you can see that that's enabled it to recover its profits. So here is that performance over time chart. What has happened to profits over 5 or 6 years? Where might it go if things go not so well? Where would we like it to go going out into the future? So we might have a future strategic plan for this business, which is about adding more routes, adding still more aircraft. This company has an astonishing number of routes. I think it's kind of well over 1,000 different routes you can fly with this airline. Continue to grow passenger volume, get good fares for doing so because competitors have failed. So that's our green line on the chart. Our red line is a less favourable future. Maybe there'll be fewer growth opportunities, maybe market conditions will be difficult, maybe competitors will bounce back, maybe we'll have to cut fares again, maybe profits will be hit. So you can have a very rich discussion in any strategy class. You can have a very rich discussion with your colleagues about your business. You can have a very rich discussion about any issue in your business simply by putting that chart on the table or on the whiteboard and put the numbers on it and put the timescale on it and describe the history and try to explain why that history has come about and describe the alternative futures and just tell the story about those 2 different futures that you're seeing. So that's an example we use in class. If you are familiar with other cases or you want to think about other cases, then by all means pick those up. There's plenty of other business examples. If you're a teacher, you can do great things with simple business models like Netflix or eBay or McDonald's. A friend of ours who does a lot of teaching of this stuff in California at the University of Chico uses a lot of local business case examples. They actually get local business people to bring their strategy challenges to their class and lay out this performance over time chart in this way. If you're trying to figure out what to do in your own business, if you're an executive or if you're a consultant working on behalf of a client, then this again is the place to start, that time chart. And it's surprisingly unusual to see that chart of performance over time, even in company reports or management regular management reports.
James, there's a lot of background noise making it very difficult. There's people chattering.
Okay. Right. Folks, I'm hearing there's a lot of background noise, so I hope you'll forgive me if I just mute you for the moment, and I'll unmute you later so that you can start asking questions. But forgive me for the moment, just so everyone can hear. Hold on. Okay, the same applies in non-business examples. I said a few minutes ago that I've had a lot of non-business people take my course, and the examples listed here are actually the cases they've been working on. I've had somebody working on an issue of how to economise on water use in a country in the Middle East. I've had somebody else working on how the cloud computing capacity providers can make less of an impact in the energy demand that they're placing on the world's power generation systems. I've had somebody working on the provision of care for people with HIV. But again, if you're working in your own non-business case, or if other people have got non-business cases, this is still the place to start. It's just that profit won't be the item on the chart. Okay. So that's the first thing you can do. Start with that performance over time chart. The second thing you can do is get on to the basic principles of the approach, which is the idea that resources drive performance. If you're coming from a system dynamics background, you will recognise resources as stocks, and I'll give an example of that in just a moment. And this idea that resources accumulate over time. This is a continuation of that same example. To the right on this chart, you can see the actual passenger journeys sold by this airline between 2006 and 2012, and what they might feasibly do going out to 2017. Where do those passenger journeys come from? Well, they come from the number of customers we've got and the number of journeys per year those customers take. Multiply those two together, and that's where you get passenger journeys from. Where do customers come from? Well, we count customers at the end of the year and we count customers at the beginning of the year. So we've got to just calculate that thing in the middle there, the average number of customers during the year. But that box on the left is the stock of customer numbers at the start and end of each year. And I've paused it at 2012, where we can see we've got 13.8 million customers. Now, where did that number come from? Well, it's not explained. If you're coming from a strategy background, you won't be familiar with this principle, but it's a very fundamental principle that the number of customers you've got today is the sum of everyone who ever joined you minus everyone who ever left you. There's no other explanation for that. That's what your marketing efforts do. That's what your pricing efforts do. They persuade people to become your customers, and they persuade people to stay your customers. So if we're going to understand what that number of customers is and why it's that number, then we've got to understand how many customers have been won. So there's our sales growth. It's come from winning customers at some rate over on the left, and it has come from losing some customer numbers to the right of that box. And that's what we call the flow rates. This will be very familiar to people from a system dynamics background, but it'll be completely mysterious to people who've never come across this before. So anyone who's trying to get people the idea of system dynamics, just bear in mind they will not understand this, and you'll have to explain it to them very carefully and very slowly. So again, there's lots of examples of this actually in the course. The other thing that could change, of course, is that customers could increase or decrease the frequency with which they buy, but there's no other explanation for that sales chart on the right hand side than those three things happening at the top: winning customers, keeping customers, and getting them to change the frequency they buy with. Now, I mentioned earlier that we have to use some kind of thing to explain this, and the thing we use is a working model, and the course is supported by a whole series of models. There's 2, 3, 4 models for every one of the classes, and this particular model is one of those. So if you just I'll just demonstrate this. I don't expect you to follow or understand exactly what I'm doing at the moment, but you just click on the simple links. The application starts up with the model in it, and this is the model that we just looked at. It's actually rather more to the model than we just looked at. The piece we saw on the slide just now is just this section about how many customers there are at start and end of year and where the passenger journeys come from. There's more stuff down at the bottom of this model, and you can get your students or your colleagues or whatever to play with this and experience what happens if things get different. So I'll just play this through, and if I pause at 2012, that is the actual Ryanair numbers for 2012. It's not some other set of numbers, that's the actual numbers that have played out to that point in time. And if I play it on to the end, that's playing out the scenario with the particular assumptions that I've made. If I reset and go back, and I can change the rate at which customers are lost each year, let's say I lose 20% of customers each year instead of 12, play the thing again, and you'll see that I end up with a lower accumulation of customers, and the model works through what that does to sales, and elsewhere in the model it works out what that does to profits. So this is an example of an experimental model that your participants on a course or your students on a degree program or whatever can actually go away and play with. So let me switch back to the presentation. So there we go. There is the second baby step that you can take with trying to get this stuff into strategy classes or trying to explain to other people. So let me move on to the third step you can take, and the third step is about putting together a working model of a business, and we use simple examples as far as possible. And this particular example is about an IT support company. This particular company set off up at the top left here. It set off to try and win lots of clients. It did really nicely. It grew lots of clients, and then, oh my dear, things went horribly wrong. This is a real case, and I've simply disguised the client. Things went horribly wrong because the company lost the clients that it previously won. It lost the clients it previously won because those clients were experiencing increasing numbers of problems. This is all playing out over about 36 months. Why did it get those problems? Because support quality wasn't very good. Why was that happening? Well, because there was awful pressure on the staff. Where did the pressure on the staff come from? Well, because we had a total service demand, which peaked up here, rather more than the capacity of the staff to deal with that demand. And you'll see that what's happening down the bottom here is that the staff numbers are actually falling, which means that we're increasingly less able to deal with the increasing demand that came from our efforts to win more business in the first place, up at the top left. So this is about as simple a model of a whole firm as I can come up with from the cases that I've got. But even this brings out all the points you want to know. On these charts, the red data, by the way, is real data, and the blue data is what the model's playing out. So we've got actual numbers of clients being won, and we've got the actual data for clients being lost, and a simulated time series for the same thing. So we can see that what we think is going on is matching pretty well what's actually been happening. Now, those of you who come from a kind of systems thinking tradition may be feeling a little bit anxious by this point that you're not seeing any of these causal loop things that we do. But do be assured they are there, and this particular model incorporates two very powerful feedback mechanisms. We talk about this in class 4. We explain where feedback features, but what we do is we discover where feedback is, rather than go looking for it in the first place, so that we look for the data to tell us where feedback mechanisms might be happening. And in this particular case, we've got balancing feedback, which is preventing our client growth increasing any further. It was going very nicely, but then it hit some limit. The limit came from our service capacity. unfortunately, we've got this horrible reinforcing thing going on down the bottom, which means that the more pressure our staff are under, the more staff we lose. The more staff we lose, the fewer staff we've got, and the worse the pressure gets on the remaining staff. So once again, this is a working model, and I'm a bit conscious of time, so I'm not going to go to the link on this particular model, but there is a link. If you go to the link you can see on the screen here, strategydynamics.com/M4A03, it will open up the working model of this particular case. As I say, if you prefer Vensim, or you like Insight Maker or PowerSim or iThing or whatever, it's pretty easy to replicate these models or versions of these models in your own preferred software. Okay, if you are a strategy teacher, and the rest of the audience will have just to forgive me for a moment, if you're a strategy teacher and that's what you're familiar with, or if you're trying to get into teaching strategy in an MBA program, what you'll typically find is a course syllabus that has got something like these topics on it. What's strategy about? How do we do industry analysis? What are these things called resources? How do they affect performance? Where does competitive advantage come from? What's a business model? How do we analyse competitors? How do these things work in different industry contexts? How does strategy change over an industry life cycle? How do we do strategy implementation? And what about corporate strategy for big complicated companies? That's a pretty typical outline for a Strategy 101 course. And it turns out that we've got stuff to add to that all over the place. And I've just highlighted that third topic, the relationship between resources and performance, because what I've tried to do in the Strategy Dynamics course is make as many of these linkages as possible, and I'm just opening up a few of these as we talk. So, for example, the one I've just displayed there, resource quality. It's a simple issue, really. It's not a question just of having more customers. We want better customers. That airline would rather have people who fly 10 times a year than people who only fly once a year. The IT support company would rather have clients who pay them lots of money for their support rather than little amounts of money. That's an example of resource quality. And yes, we will get on to intangible things like reputation and morale, and we'll talk about capabilities, our capability to develop new products and services and so on. So if you're coming from the strategy world, or if you're trying to break into the strategy world, you should just be aware that there is this thing in strategy called the resource-based view of strategy and performance. And what this approach does is it operationalizes that. It turns it into something you can actually work with and do, and you can do analysis with it, and you can build models out of it, make it actually work, which is one of the weaknesses with the resource-based view in the strategy field at the moment. There are many more links to be made, and you into the standard strategy agenda, and you can see those if you go to the strategy teachers information on the online course page at strategydynamics.com. I said at the beginning that just a short word about resources, but let me just explain what there is. Obviously there's slides and handouts, as there would be for any online course, and if you are a teacher, a registered university or college or school teacher, and you want to teach with this stuff, if you register with us, you can have that material. If you take the course, then you get personal access to it anyway. There are also working dynamic business models. I've shown you one of those, and I've shown you a link to another one of those, and there are lots of these. It's not just one or two of them. I've tried to illustrate every single point in the course with these working dynamic models. And there is software which runs the models and which you can use to develop them and change them if that's what you'd like. That every class is supported with one or more worksheets which you can use manually, and that they also come with examples. And obviously the course is supported by books. If you go and look at the online course pages, it will tell you what those books are and where to get them. The other thing we will do is that if you wish and you want to teach with some of the class videos themselves, then we can find ways of helping you make use of those. We have not yet added quizzes to the course or assessment to the course. We will be doing so, and anyone who wants to teach with any of this material, we can tell you what kinds of questions and what kind of assessment to do for students, but we're not quite there yet. Now, as I say, pretty much all of that is free to registered university teachers, and we've tried to make it affordable and accessible to commercial people as well. So, as I say, we've done our best to make this stuff available. This slide simply shows the outline of how the course works. Those are the same 10 topics down the left-hand side, and every one of those topics comes with a summary video of somewhere around 15, 20, 25 minutes. There is, in addition, between 2 and 4 additional video segments, typically 8, 10, 12 minutes long, that explain more about that stuff. So if you want a quick overview of what the course is all about, all you need to do is run through the summary videos. If you want to get into Part A in more detail, then go through the Part A extra details. If you want to look at Part B in more detail, then look at those, and Part C, and so on. So that's kind of the whole thing, the full kind of Strategy Dynamics course that's available. So let me see where we got to. Right, that's pretty much covered everything I wanted to in the presentation part of this. So now I hope that I can hand over and offer a chance to...
Let me know on chat if
Yes, I'll hand over for questions now, and what I'd ask you to do is if you could submit questions by chat, then we can deal with those as they come in. I may try unmuting everybody so we can have an open discussion, but we've got quite a lot of people online. Was it 24 people are online with us, so if it gets too noisy and doesn't work, I'll have to mute everybody again. But if we could start on any questions coming in by chat, that would be really good.
If you've got one that you have up and see, deal with that while we're waiting for people to put them up. Should we address the question to you or to all?
Okay, the question that's just come in is, should we address the question to just me or to all? Put it up to all. I will try my best to answer all the questions that come in. But I think it would be useful for everybody to see what everybody's questions are. If you really want to address it just to me, then feel free to select @Kim at the bottom of the chat window. But otherwise, @all should be fine. Okay, question coming from Gary asking what help, material, support and services do you offer to strategy consultants? Well, the same materials are all available. It's just that if people are in a kind of commercial environment, then we ask them to make what we think is a reasonable payment for that. But I should add that I confess to finding these situations that people work on quite interesting. So the chances are, if you start asking questions, I might well respond with some additional thoughts and advice, which you may find useful, you may find not useful, but I will typically try to respond. There is also a forum, by the way. If you go to the website, there is a forum there, and you can put questions into that forum. If they are general questions, then the answers will be made generally available to everybody else as well. The same, by the way, applies specifically for teachers. There is a teachers forum within that, where we aim to address questions that teachers have got. The other two webinars in this series will talk about the kinds of cases that we use in the course, the kinds of cases that other people might use, and the third webinar will talk about student exercises and assessment. So those are the kinds of things that might be covered on the teachers forum. For commercial people who want to take the online course, you can take the summary course for £150, and part A, B and C. If you take all of those, that adds up to £450. It's also available with additional direct support, and something I will probably try to run maybe March if I can is a kind of masterclass thing where if we've got enough interest, I will try to run a number of people through the course in parallel and with guidance. So we're giving people some help on actually applying the thing, not just figure it out for yourself from the videos. I hope that's enough of an answer for Gary. If not, perhaps Gary could answer that question. Shelley's asked, he noticed that the flows have 2 flows in each flow rate. Is this something new? Right. Let me just go back and explain that. I explained when I was demonstrating this particular model that the red data here is actual case data, and the blue data is what the simulation is calculating. Every value in these models has got 2 values. Every item in this model has got 2 values. The red is data that you have put in, and the blue is what it has actually calculated. I think I may have time just to demonstrate this particular one. So I'll go to this model now. Okay, here we go. The models come in 2 versions. One version is read-only, which you may want to share with students, and the other is kind of fully open, which people can open and play with and change. But if you play this out, I'll just play this to month 24, which is the point at which this particular situation was looked at. And I'll just scroll down. Can I zoom in here? Should be able to. No, I can't zoom in while I'm actually running it. But you'll notice on this client number here, there's a red number 129 and there's a blue number 117. Well, 129 is the actual data for that point in time for the actual case, and the 117 number is what the model is calculating. So I hope that is answering Shelley's question. Shelley has a supplementary question, which is about a software called MyStrategy. And MyStrategy is an old, is a kind of Windows-based model building software that we previously used. And one of the reasons we moved to this new version of SysDea is to overcome some of the limitations of that old software. So MyStrategy is still available. It kind of does. Sorry, it's still available to people who've already got it. We're not making it available to anybody new because we would rather people moved on to this much better product. I think there's a second question here, which is how can we get students to learn how to build a model from a case? Well, if you go through the online course, in the first 4 classes, there are 3, 4, certainly 3, possibly 4 examples which we build up from first principles, step by step. So in this particular case, we've got data about the number of clients, we've got data about the number of staff, we've got data about the number of problems that clients were facing, and the step-by-step process we go through is to start with the performance outcome we're concerned with, and then just step back, step by step, in a logical, causal way to say what causes this number, what causes this number, what causes this number, and look for the numbers that actually do that. Now, when you do that, you're not doing anything desperately unfamiliar to most students or most analysts. That's what they do when they build a spreadsheet model. You know, they want to work out what profit is. They say, well, profit is revenue minus costs, and revenue comes from sales multiplied by price, and sales come from customers multiplied by their purchase rate. All of the links in these models are no different than the cell references in a spreadsheet equation. It's just the same thing. I've been teaching this way for quite some time now, and my experience has been if you take students through that logical step-by-step approach, or if you're working in a business or working for a client and you take them through the same approach, they do kind of get it. It's not too mysterious. The thing that's mysterious is the bit at the top of this diagram and the bit at the bottom of this diagram. People are not familiar with this idea that the only way to work out how many customers they've got is how many they've won and how many they've lost. They're not familiar with the idea that we should figure out how many staff we're winning and how many staff we're losing. It's a bit of a blind spot in strategy, but people can do this. I've got Shelley has kind of built on that question, thinking about actually working with converters, flows, stocks, and so on. Well, I just need to be a little bit sensitive here that I don't want this webinar to come across as me trying to sell this software. As I say, you can do all of the principles I'm talking about here with other software. You know, frankly, if you want to, you can do it with a calculator or an abacus if that's what you've got. Or you could do it with spreadsheets. But since Shelley asked the question, the help system that supports the software does actually take you through step by step how to add a variable, how to link variables, how to do calculations between variables, what a stock is, what a flow is, how the calculations work in those. So I hope that actually does work okay. If anyone's tried it and finds difficulties with figuring out how to use the software to build models, please do just let us know and we'll try to help. Okay, so a question here coming from somebody, viewer 55. I don't know who you are. If you'd like to click on your name in the drop-down list of people on the call, you can actually put your real name in, but I'll answer the question in case you want to stay anonymous. How does one build and run a model for a startup business with little or no historical data? When I first started doing this at London Business School has got a very strong entrepreneurship group, and many students go on to start their own businesses and build business plans for their organisations before they do that. And this came up a lot. Of course, if you're going to somebody to raise money. Maybe you're going to the bank to ask them to back your business plan, or you're going to venture capital people to ask for money. They will want a business plan. If you're trying to get a new business started inside another company, then you'll have to get backing from senior management as well. So you've got to put together a persuasive story about how this new business idea of yours will actually work. Well, you will have to take them through the same thinking of your own that you went through to come up with the case that this was a good business to get started. There is actually an example that runs through the course. It's the startup of a single restaurant business. We deliberately chosen a very simple and very well understood business model for the example, but it starts with the idea that you want to grow profits, you want to grow cash flows. Where's that going to come from? Well, it's going to come from the growth of your revenues and the minus the growth in the costs that support that. Well, your revenues are going to come from winning customers. So you will have in your head some idea of how many potential customers for your product or service there might actually be out there. And so, you know, if you look at the diagram we've got on the front of us, on the left-hand side here, a bit kind of invisible because we just haven't included in the model, there is a world out there in which there are potential clients for this IT support firm. When you start a new business, all of your customers are in that potential stock, and your job is to pump them through this pipe here and get them into your customer base. So more specifically, how do you build a model for a startup business with no historical data? Well, it is very, very unlikely that no similar business already exists. It's just about possible that, you know, you might have the next Google, which is something no one's ever done before, or you might have the next eBay, which no one's ever done before, but it's pretty unlikely. So in most cases there will be examples that are somewhat like the business you are trying to start. So if you follow the principles in the course, you can build up the architecture. We call this diagram an architecture, the business model, the dynamic business model of how the thing actually works, and start putting in what you believe the data to be and what you think its rate of change will be. So if I'm going to grow customers at this rate, then I'm going to need the following products, and I'm going to need so much capacity to do so. I'm going to need to grow staff at some rate so that I've got the capacity to go out and win those customers and support those customers when I've got them. So you're dead right, viewer 55, that you won't have any historical data, but you can you can develop the model exactly the same way, starting with how you hope the profit number will grow, how you hope the revenue will grow, how you hope the costs will grow, and the value that the model will provide with you is that it will reconcile what has to happen on the left-hand side in order for the results on the right-hand side to come out. And as I say, you can go looking around for similar cases that might back up evidence to support your business plan, and then armed with that, you can go to your bank, or you can go to your venture capital, or you can go to your headquarters and say, here's this really great business model, and kind of here's how it works. I've recently had a client who is a commercial lending division of one of the big banks. I know we don't like the big banks these days very much, but they still do a useful service. And this particular division of this particular bank lends to small and mid-sized companies, which are very often in exactly the situation, trying to grow from nothing to create a new business. And what they are doing is developing these models with their borrowers, so that both they and their borrowers know how the business is supposed to work and deliver the profit growth that they have in mind. So, viewer 55, I hope that's answered your question, but if not, please feel free to come back and ask further. Cool. Okay, it looks like that was Peter. Any other questions? I think we're actually formally now out of time. I'm happy to go on and run overtime, but we will now just be going on and answering questions and having discussions. So I'll carry on doing that as long as there's a significantly positive number in the list of people at the top of my screen. It's currently 21, so I'm very happy to go on answering questions. Does anyone have? Okay, I see there's a question coming in here. At least I hope there is. Someone started typing something. One thing I could just ask is if you're familiar with teaching systems thinking, I guess quite a lot of what I've said this afternoon will be a bit different and unfamiliar. So can I ask you a question? If you come from a systems thinking background, or even if you don't, how scary do you find what I've just taken you through? Does this look really difficult or quite doable? Perhaps we could just get one or two people putting some comments on the chat saying, oh God, this looks all awful and difficult, or no, I think I could do this. Meanwhile, Shelley's asking the question: if you want to use the material in a course, should we take the class online? If you want to use the material in a course you are running, then you should definitely go through the course yourself first. I could actually run a kind of syncopated, a synchronized. The syncopated would be neat, but let's run a synchronized course where a number of teachers go through the course at the same time together. What you might do is do a little poll after this webinar and just ask a few people what they would find useful going forward. But yes, you should definitely go through the material in the course. The way the course works, by the way, is you immediately get access to all of the material, and then you just get a weekly reminder to go on to the next bit and think about the things in the next class.
I've got one person saying their approach is very clear. We'll change their name to that.
Okay. Any other questions from people? How many hours per week should we plan on? This is a difficult question, but the students who just took my course, I told them it would be about 3 hours a week. They told me, get real, it's at least 5. But I have to say, they over-delivered on the course in a fairly major way. We had people spending a huge number of hours on it. But if all you want to do is the basics of the essential steps, I think 3 hours a week should be enough to get you going for the first steps that I've explained here today. If you try it and you find it is more demanding than that, then please do let me know. But I think you should be able to do it. If you have to be focused, of course, but not. If you are focused, it shouldn't be too difficult. I'm also being asked if there's a manual for the software. If you go to help.systea.com, that is the manual. It covers everything that the software currently does, and we've tried to organise it in a way that you can follow. Okay, I'm getting a comment here from Peter. I've been informally studying Donella Meadows' primer Thinking in Systems, and this complements that understanding. Good. I'm reassured by that. I'm a little bit sensitive to the the fact that a lot of people will be coming to this from a familiarity with causal loop feedback diagrams and qualitative diagrams, and getting people discussing these feedback effects in groups. I've done that. I've spent 10 years trying to teach people and trying to advise people from that approach, and my experience was not very good. It could be that I'm just not a very good facilitator, but I found I couldn't do it. As soon as I left the room, they got it wrong. So what I've tried to do is kind of leave my side of the table and go over to their side of the table and ask myself, what is it people already understand? And in my world, in the business world I work in, they understand profit, they understand revenue and costs, and they understand cash flow, they understand cash in a company bank account and cash in and cash out. So rather than start with trying to assemble comprehensive feedback diagrams and then figure out how to make a model from it, what I've tried to do instead is kind of start from the performance we're trying to explain and work back to the system that's determining that. You will discover feedback for sure, because it's all over the place. But we discover it rather than go hunting from it from the outset. Okay, so Shelley's asking if you're at the beginning of a new course in strategic thinking. Yeah, if you are about to embark on teaching strategy for the first time and you've got an existing course outline, I wouldn't recommend for a moment that you throw that out the window and start again. Many young faculty who are starting teaching for the first time basically get given a course to teach and told to teach it that way. So just be careful about putting this stuff into an existing course. That's the way you should do it. Introduce it a few little pieces at a time. Eventually you'll get to the point where you can do a whole class on dynamics or a whole 2 classes on dynamics. Eventually you'll be able to offer a whole course on things. But take it slowly and carefully. So next question I've got is, have I considered providing a facilitated program to take an organisational working group through the process to develop a model and strategy for their organisation rather than learn about it in the abstract? Well, that's what I do in my advisory work. That's exactly what I do in my advisory work. Doing it online, I think in principle it could be done, but I think I prefer to do that first of all in a low risk environment, with a trusted client who just wanted to use it with a new team or something of that kind. If people want to take the course as a group, we will certainly do private groups taking the course together, and what we can do then is we can actually take their case example and work through the course together. I'm very happy to do that. I'm actually talking with a couple of organisations about doing exactly that thing right now. So yeah, but Gary makes a very good point that like any new concept, it is far easier to get your head around it if you're actually applying it as you go rather than trying to think about it in the abstract. So yes, we can do that. If anyone wants to, simply contact us and ask us to how we can do that in your particular case. Okay, Michelle is just clarifying his question about introducing this to a new strategy course. I'm very happy to answer questions about teaching issues, either privately if you just wanted to exchange questions directly with me, or on the forum if it's the kind of question other people might have. But the best thing to do, I quite often get this this kind of question, just get me the course outline that you've got in mind, and I'd be very happy to make suggestions as to how it might work best to incorporate some of this thinking in that course outline. How are we doing? Any other questions? We've still got quite a few folk online, so if any of you have still got questions or comments, I'm still happy to carry on answering them.
Something from Jean.
This is a comment really from Jean. Thanks for this. The problem with qualitative models is that after you build them, you still don't know what you don't know. Well, yes, indeed. That's also sometimes a problem with quantified models as well. But my experience has been that at some point, when you work through the process in the way this course explains, you kind of get to a point where you feel you know enough. I mean, the principles are quite simple, really. We've made a bit of a kind of mystique about this feedback thing, but if you look at the example we've got on screen, the causality kind of through the middle is relatively simple. There's a reasonably simple relationship, for example, between the service demand in this company and the staff capacity to deal with that service demand. And all of those thin causal relationships, if you were doing it in Excel, you would simply write an equation with some cell references to do it. We're not doing anything mysterious with any of those things at all. And you get back to the stocks of clients and staff in this case, and there we do that in Excel as well. Customers today in column Y is customers yesterday in column X, plus or minus customers we won or lost last month also in column X. So I did actually have a student on one occasion build an entire system dynamics model for me in Excel, which I thought was quite brave and foolhardy, but she did it successfully, so it is possible. But the uncertainties, when you've done all that, the uncertainties are at the flow rates. It's all about the flow rates. Why is that particular number of clients leaving at that particular rate at that point in time? If we look at the bottom, why is that particular number of staff leaving at that particular rate at that particular month? And if there's uncertainty about how our system is working and performing, it almost always gets back to uncertainty about how people are behaving at those flow rate points in the model, and that's I just find that rather easier to grapple with than looking at a kind of whole system model and trying to figure out whether some particular loop is dominating some other loop or not. And the data kind of tells me whether I've got close enough. There's a little bit more detail behind this model I'm displaying here than I'm actually showing, but not very much. So kind of when my blue line looks pretty close to my red line, I'm thinking I've pretty much explained what I need. There's always the possibility, of course, that there'll be other things that I haven't anticipated that might affect it in future, that I haven't found from previous things happening, but based on what I know up till now, that's a reasonably complete explanation. So I'm not suggesting for a moment you shouldn't carry on and ask people about other influences that may be important and look for other feedback loops. Yeah, please do. But the data should tell you when you're getting reasonably close to a quote good enough answer. You'll never get to a perfect answer, of course, but you find a good enough. What else we got? Shelley's comment: I found building a model is like detective work. The story tells you what the variables are, and then you're determining what values you need to make it work. Yeah, that's true. That's true. Yeah, I think that's a very good way of putting it, Shelley. We when I teach this on a standard strategy class at London Business School, the program director who introduces it, he introduces me as a forensic strategy guy. I suppose that's quite a reasonable way of putting it. We're trying to pick apart why this particular patient has got this particular illness and what kind of medication to prescribe at what points in time to fix whatever's wrong with them. Again, we are out of time, but we've still got 15 people online. So let me just ask one last time if there's any more for any more. I'll give people maybe 5 seconds for any final questions, and then I think we'll call it the end of the day. Okay, it looks like time's up then. As I say, we have recorded all of this, and I will attempt to get that recording processed and posted for you so you can review it at another point in time. If you're back with us on Wednesday, then we're going to look at the kinds of examples and illustrative cases that you might use, whether you're trying to explain things to colleagues in a corporate environment or whether you're trying to actually teach in class. So I hope you found this useful. I apologise for those of you who had sound problems. We really don't understand where that was coming from, but we'll try and figure that out before Wednesday. So as I say, look forward to seeing you on Wednesday. Bye for now.